Good morning, traders. Stephen Davis, RJO Futures. Frigid Chicago. Happy Friday to everybody. We're going to be 50 degrees on Sunday, so we're all happy about that. I'm one of the senior market strategists here to talk to you about the grain markets. Corn market, it is higher today. You had a daily reversal up yesterday, so pay attention to these reversals. Professional traders do, and we should also. Harvest is wrapping up. There's still some corn in Michigan and Wisconsin, but they'll get to it, and this harvest will be over, and we'll focus as we are now on the demand for the corn market. A lot of talk about ethanol. Ethanol margins are good. They're going to continue to be good. And exports on ethanol, you're going to hear more about that. So that's a good demand story for our corn. Low prices is the cure for low prices. So the soybean market, this rally that we've seen in November, it's all about filling the pipeline. And that's exactly what we've done. The barge freight movement last week, there were 806,000 tons of soybeans on barges moving around our Midwest. A year ago, there were 430,000 tons of soybeans. So we have filled this pipeline. And what happened? This soybean meal rallied, and some of our customers went to other origins. So there's perhaps the big picture. There'll be more soybean meal around, and that'll be bearish for prices. The global economy, the US of A, our great country, we can't carry the whole world forever. So we need Europe and Japan to pick it up in here, and that'll be a more good demand for our grains. The fund market, I want to talk about those a little bit. Crude oil was $100 in June. It's $75 today. So they don't really have the momentum at their backs. I'm trying to think of who's going to buy the grains next spring. The funds bought them here in November. They bought grains last spring. Perhaps money's coming out of crude oil going into the grain trade, but I'm just wondering, are they going to be around in the spring to buy the grain markets with all this grain that's awash in our country and in the world? They're talking about an El Nino, 70% chance of El Nino this coming year. That means a lot of rain in South America. And that's the one caveat that could really be bullish for soybeans, is a hot and dry scenario in Brazil. And with a 70% chance of El Nino, that doesn't seem like it can happen. So we'll keep talking about that. China and Australia, two great names in the world of commodities. They announced the commodity pact this week with China buying Australian products. Well, Australia, more than 50% of what they ship to China is iron ore. The biggest agricultural commodity that they ship is wool. I found that interesting. But when the world wants corn and soybeans, they look to North America and South America. So the agriculture minister from Australia, he said, this is good for our agriculture. It's going to be higher prices for our agriculture, more customers buying our products. And that's what we're talking about here, is more of the world buying our grain markets. So one other comment, we talked about the soybean crush report that came out on Monday this week. And it's important about the soybean meal situation. And it was a record soybean crush. And that means a lot of soybeans crushed, a lot of soybean meal around. And typically that means lower prices. And the trade rallied on that. So be aware of these government reports and when they come out and what they appears to be bearish, and the market rallies. So looking ahead next week, what can drive the markets? Well, it's Thanksgiving on Thursday. So happy Thanksgiving to everybody. We're going to have a great day. We're closed Thursday. We're going to open Thursday night at 7 o'clock. And then the grains will trade till noon on Friday. So seasonally, it's a time of year where markets try to trade higher. That's what they're doing today. And I would look for that to continue next week in our holiday shortened week. But we'll talk to you next Friday. And happy Thanksgiving early to everybody. Thank you.
Futures and options on futures may involve substantial risk and may not be suitable for all investors.